When people think about Cosmos, they think about interoperability, and that's a good thing. But also, I think what people take for granted is that Cosmos was the application, the first production ready application that proved proof of stake. So in that regard, we were able to make a significant contribution to the crypto space. The interoperability was a consequently like the next iteration of how we're going to achieve an internet of blockchain.
None of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by WAGMI Ventures or any of its affiliates to buy or sell any securities. Hey folks, Benga here with another WAGMI Ventures podcast episode. We're switching things up here a little and interviewing a fellow podcast host, a crypto OG, and one of the most prominent female builders in crypto, Chjango. She is the host of Cosmos radio station, Interchain FM, a validator, investor, and advisor to Cosmos app chains. For anyone who is new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders and founders across crypto and AI. Check out wagmiventures.io to learn more about the syndicate behind the podcast. All right, let's get into it with Chjango. Hey, Chjango, welcome to the show.
Hey, Benga, thanks for having me.
Yeah, it's honored to be in the presence of crypto royalty here. Gonna ask if you could introduce yourself to our listeners, share your background and your journey into crypto with us.
Yeah, totally. So I started in crypto in 2014, or rather, that was when I learned about Bitcoin. And in under a night of learning it, I recognized that this is a paradigm shifting technology. And so I went all in and I quit my job at the Jet Propulsion Laboratory January of 2015, and then took a one-way flight to Bali and then started building out the Bit Islands project. If you're not familiar with the Bit Islands project, this was an initiative to turn Bali, the island, into a Bitcoin haven. And the idea was that you didn't need to convert your US dollars into rupiah. You would just fly in with your Bitcoin and be able to transact, get a hotel, things of that nature. And then in 2017, I met Jay and we hit it off, and he was talking about the multi-chain vision in a time when almost everyone believed that the future of applications was going to all live solely on Ethereum. And I, being a contrarian at that time, I said, okay, I'm in. Let me help you build this, because I thought that this is what makes sense to me. So started building out Cosmos. We built out the validator ecosystem, really proved the proof of stake consensus algo out in the wild, and the market validated this. So we were able to push the first gold standard of proof of stake consensus to the market, and the market validated that idea. Bootstrapped the earliest validators where there were none before that. And yeah, built out the multi-chain vision, built out the SDK for anyone to build another blockchain, whether it be horizontal or vertical scaling. Yeah. And then I started doing podcasting while working on Cosmos, because at the time we were concerned about the fact that we didn't, and this was in 2019. So we were concerned about the fact that there weren't really any YouTubers or good distribution outlets for talking about these technical frameworks. And so that's how Interchain FM got started. But yeah, and then I just kept going at it, even after I left Tendermint in 2021. And now I advise various projects, prominently Osmosis, the Interchain DEX. We call it our liquid hub or the DeFi hub of Cosmos. Yeah. And I invest on the side. One could say that there's sort of a revolving door between operators and investors. And so I decided that it would be interesting to dip my toes into the investment side and see what opportunities there are in that area. And I started validating for certain app chains, including Celestia, Cosmos Hub, Osmosis primarily. Yeah, and here we are.
Yeah, wow. That's quite a journey. Like, from NASA to the Bit Island project to building out the vision for a multi-chain world to being an investor. That's pretty amazing. I think closely tied to that is always the question around how your evolution in this space, but like tied to that, your Monica Django, very striking, right? Django Unchained, like, is it a name you came up with because of your journey and evolution through blockchain? Like, how does that come into play when we look at your background?
Yeah, so Chjango and Chain came before crypto. I was Chjango chained while I was at JPL. I was very much feeling like a cubicle wagey, so to speak. It just wasn't really an environment conducive to very much innovation. If you joined space exploration within the government after the 1970s, you're really joining after the heyday. It would be like someone who joined crypto in 2030 and still expect it to be as innovative as it is right now. So I was hungry for joining a community that would have been more aligned with what it is that I was looking for. And so Bitcoin back then, I would say that our golden years were in 20 to 2017, right? It was very much a Wild West. Everyone that you ran into was just this brilliant, eccentric person. Most likely they're an ideologue, right? They bought into the vision because they believe that this is the thing that's going to solve a lot of the problems that exist in the meat space world that sort of disenfranchises the average person. And so Bitcoin back then was seen as this freedom technology and it would lead us to this better world. If you look at where we are today, that's not entirely the case because now there's regulatory and institutions kind of throwing their weight around. And so the little person doesn't really have that much room to thrive outside of meme coins. And so I want to talk about that later, but this is just a little teaser for my more macro narrative that I would like to share later.
Yeah, actually, you kind of jump into it nicely. And as we sort of think about how that revolving door, you talked about being a builder, being an investor, and your perspective from being on both sides of the aisle and understanding the evolution of the landscape over time. Yeah, you talk about the meme coin cycle, that narrative perhaps dominating even over what may be considered as a more value added project and what the genesis of that is, and perhaps endemic of a more critical problem here, maybe larger players coming in to push the little guys only to a corner where they think meme coin is where they could potentially add value or the only place they can add value. And you have shared some thoughts in our prior conversations around this. So yeah, would really like you to dive into that and talk more because I think it's really interesting your take and your perspective on it.
Yeah. So lots of people in the last couple of months, meaning we saw the rise of crypto. We had this like little mini pump, so to speak, from October of 2023 to May 2024. And people on crypto Twitter were observing that where is all this money coming from if retail is not here? And clearly it was coming from the ETFs, right? Like BlackRock was leading the ETFs and people were dumping Grayscale, and yet the amount of BlackRock ETFs sort of overshadowed the amount of that was going out. And so we know that the institutions are here, and even now now that we're talking in fall of 2024, we're still observing lackluster demand from retail. It's only starting to ramp back up now, and I expect retail to come back fully between now and the next 6 months from now. But importantly, who is retail, right? Like when we talk about this demographic, we should understand who this really is. So in a 2024 study by the NIH called Decoding the Cryptocurrency User and Analysis of Demographics and Sentiments, we know that retail is men who are between 18 and 45 with a monthly income of more than $3,000. And the way that they use cryptocurrency overwhelmingly is for speculation as an investment instrument. And the amount of money they spend in transactions only range between $500 to $2,000. So retail is the long tail of capital who are going into crypto basically in penny stocks, right? If you're a retail in 2024, there's no way that $500 to $2,000 is going to get you anywhere investing in a couple of sats. It's just, it doesn't give you the amount of asymmetric alpha that you would get from something else. And what is that something else? Well, it turns out retail overwhelmingly picks meme coins for that something else. When you
Right.
see, yeah, when you see people tweet about Mu Dang turning $3,000 to $1.3 million within a 16-day round trip, that's what retail wants. And so that's kind of where we are at in this cycle. We're seeing meme coins outperform altcoins. And when I say altcoins, I just mean anything that's not Bitcoin that has utility, that's more of a technology play. Like people are actually seriously trying to build something like that's more high technology, low time preference than a meme coin, which is low tech. It's just a token. It's just a token that captures some kind of cult mentality. So it has some kind of mimetic fundamentals behind it. And it has very high time preference, meaning 16-day round trip. And you could make more than 1,000% return on your investment, right? So that's the type of, right now we're seeing meme coins as the spiritual successor of the ICO boom in 2017. This is what Mustab Murad was talking about in his talk at Token 2049. It was a great talk, and I don't disagree with him because, like, if we were talking about custodianships before that, right? Because you come from that background, like, why are we here where a lot of the retail momentum is investing in the Wild West instead of investing in possibly innovative breakthroughs? Well, it's because, like, if you look at the barrier to entry now compared to back then, even in 2017, it's significantly higher. As a new developer, you need to front load a lot of your costs on legal that you may just have to like sink tens of thousands of dollars before you even have a product going. And so you need to talk to legal, and they don't even have the right answers. They need to interpret the securities laws framework and help guide you, and that informs how your product is built. And then you need to create a new company outside of the US. Let's say, if you're a US citizen, right? So you need to start a token foundation in Switzerland or BVI, wherever, and then another operating company offshore before you're even able to build a product. Whereas in 2017 with ICOs, you were able to just raise money upfront from anyone, not just accredited investors. And you didn't have to worry too much about the SEC coming for you, even though you had to respect that framework. And you didn't need to worry too much about institutional demand. Institutions weren't even here yet. You weren't too worried about getting listed on exchanges because that was like a secondary concern, and exchanges weren't charging as much as they are now over token listing. So there's all these new barriers to entry. And one of the new barriers that is really interesting to note that not a lot of people know about is the notion of qualified custodians. So in February of 2013, the SEC came out with a new proposal saying that if you are a fund or an institution, you have to go through a qualified custodian. It is illegal to do self custody, even if your firm has the technical chops to be able to perform that self sovereignly. So the issue with that now is who gets to be a qualified custodian, right? The SEC now has unilateral control over who it says should have the right to do that. And it's no surprise that only a few weeks ago, maybe not even more than a week ago. Anyway, the fall of 2024, the SEC approves the Bank of New York to be a qualified custodian. So who do you think the SEC is going to approve to be qualified custodians and who it's going to deny, right? And so they've introduced a new gatekeeper, and that's the qualified custodian. And the problem with that is qualified custodians implement arbitrary rules about who gets to stake to which validators. So, for example, if we talk about Anchorage, Anchorage keeps a whitelist of validators that it basically partners with, because the validators may support Anchorage's own objectives in like some specific way. And so the validators that get to be on Anchorage's whitelist are people who it strikes beneficial partnerships with. And the validators that don't, or are maybe too small, or maybe doesn't have some kind of advantage to work with Anchorage, Anchorage keeps off that list. And the importance of that list is that if you are a validator that is not on that list, it charges its institutional customers an extra 3% fee to delegate outside the list. And so what that creates is this additional hurdle that prevents institutional capital, which is where most of the capital is, from staking with smaller validators. So now you see that even if the staking layer ones themselves don't impose any sort of restrictions in that regard, the qualified custodians themselves are preventing, or rather they are encouraging and incentivizing further centralization of staking demand into the top 10 validators. And so they entrench certain validators over others, and this hurts the decentralization of a lot of the staking protocols. And so you see that with these downstream effects of the regulatory landscape, there's all of these negative consequences that hurt the overall distribution of any proof of stake network. And that is something that's extra protocol. It's something that, with Cosmos, because we pioneered this stuff, we didn't foresee all of these extra protocol factors that would then hurt the decentralization of your layer one that the SEC then introduced much later on in the game. And so now we're seeing this additional regulatory hurdle. And now, if you're trying to build a DApp or a layer one today, you're going to need to work with qualified custodians and get them to onboard your app chain or layer one, what have you, to get them to integrate you, to be supported, right? Because if you're not supported by these giant custodians or by these custodians, you're not going to be able to get institutional demand, because the institutions and the funds are required to use a qualified custodian in order to get exposure to the tokens and the coins that the qualified custodians support. So now we see all of these different regulatory hurdles for the altcoins. And that's why, when compared to this, the Wild West of crypto in 2024, the meme coin landscape is so much lower barrier for anyone that's trying to build in the space. Like, what if it's so much easier to just launch a Sol shitter on Solana? Like, it takes less than 24 hours to do that, and you have the opportunity to like 1,000x that tiny little penny stock, basically. Then why wouldn't you just launch this instead of doing all the cumbersome hard work of launching an altcoin and actually building something that innovates in the space? And as a retail investor, why would you try to enter into this landscape as someone who's not an accredited investor, who didn't get into the seed round, who is basically exit liquidity for funds like Multicoin? And why would you subject yourself to that when you could have asymmetric advantage by just looking at Deck Screener and going in, spray and pray into any new Sol shitter that comes out, and maybe you'll get a 1,000x on one of them, right? So that's the current landscape of the cycle in 2024. And that's why we see that a lot of the retail energy has been focused on left curve memes instead of right curve highbrow technology for low time preference individuals.
Hey everybody, quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team at wagmeventures.io to learn more and figure out if Wagme Advisory is the right fit for your project. Let's get back to the show. Yeah, that's a very fascinating insight, Chjango. A number of things that you touched on there. I think probably the central theme there is your sense of this new, like, gatekeepers or folks who might perhaps knowingly or unknowingly be pushing against the ethos of which is decentralization, instead incentivizing models or approaches that gatekeep as well as propagate centralization, if you will. How do you think as a community that we address this? Or, I mean, first of all, I think being able to identify them as issues in the way of innovation is key, and really calling it out for what it is. But how else do you really think the community can work, whether it's within the community or with other folks in the larger ecosystem, to address some of these choke points?
See, the thing is, I don't think we can until, or not until, or rather, like, unless we actually have a say in what the SEC is currently mandating.
Yeah, from a top regulatory view, yes.
Yeah, because as we alluded to earlier, the downstream outcomes of what I've observed is a direct result of the SEC imposing those rules. Like, these changes were made in the last year, and that was as a direct result of just a proposal that the SEC made. So the qualified custodianship became codified into the crypto zeitgeist, and I don't see it moving backwards. I don't see, like, a lot of things that you observe with major organizations are like new processes that you see, or new security protocols like TSA and right, TSA, these other things, these mandates, they tend to be very sticky. They always come out of some kind of urgent need, or as a reaction to some other catalyst that came from upstream of you. They're normally supposed to be a temporary measure, but these temporary measures never get lifted. And so they kind of stay in place for the rest of time. So until the people, are able to fight back or do something that addresses the upstream instead of the downstream, I don't think there's really much that we can do. I mean, like, if you look at how technology has, or if you look at Web 2 and how Web 2 had evolved, if you were browsing the internet in the 1990s, and you could go into various corners of the web, go to different websites, there were a whole lot of really interesting corners of the website that you could explore that are no longer around today. And when you browse the internet today, it's really, you're engaging with a handful of applications, maybe four, right? Your Twitter or X, Instagram, TikTok, Reddit. There's really a few that you could name. And this is a direct outcome of things that we're seeing now, right? There's this proclivity for things to centralize over time, not decentralize. So I think the same thing will happen with crypto. The technology is there. Cosmos, we built the framework for anyone to launch their own layer ones. But even if you can technically, I think a lot of the external pressures from the meat space world that we're subjected to is now growing ever more cumbersome. And so I think in the future, we're only going to see a lot of the transactions happen on a few blockchains, not thousands of them, just because of this effect. So it's the same thing. When crypto was a wild west, anyone could build a chain. Users could go on any chain and find niche applications in niche corners of Web3. But in the future, because of how the regulatory landscape is informing the incentives of our industry, we're only going to see transactions converge on a handful.
Yeah, that's deeply insightful. You've always been a contrarian, I will say, been right most of the time. The future is multi-chain, and the extent of what that looks like might be a different story. And your contrarian view has definitely made you an influential voice in crypto, in the Cosmos ecosystem, And I'm just thinking your thoughts on the broader interchain vision and the biggest challenges and potential investment opportunities in interop that you see today.
Yeah. So I think that when people think about Cosmos, they think about interoperability, and that's a good thing. But also, I think what people take for granted is that Cosmos was the application, the first production ready application that proved proof of stake. So in that regard, we were able to make a significant contribution to the crypto space. The interoperability was consequently like the next iteration of how we're going to achieve an internet of blockchains. I think so in the interoperability space, we've seen, well, I mean, we're seeing a Cambrian explosion of different interoperability protocols. Also, the same effect as what we were talking about before, the convergence on a handful of them, a handful of the best options. We're going to see that with interoperability protocols. We're going to standardize, and we can't not standardize. There needs to be some kind of market-based agreement about which standards are the best, so that as a space we can start building abstraction layers on top of these standard protocols and finally move on to the breakthrough consumer applications that are going to ultimately be built on top of this infrastructure. Ultimately, right now, like as a space, we're investing in a lot of sweat equity as well as capital into infrastructure, but that's because that's where we are. I think in 5 to 10 years from now, that's not really going to be a case. Infrastructure is going to be taken for granted, and it's going to be just a given and perfectly abstracted away from the end user as well as the consumer apps themselves. I think right now, the way that application developers are approaching consumer apps is I'm a crypto native first, and I'm going to try to figure out how to build the consumer app later because I see my thesis about what consumers are going to need in the future is going to play out. But they're crypto first and then knowledge of the apps, the application's market later. But I think
Mm.
that in the future, this paradigm is going to be inverted. It's going to be the consumer app first. So let's say the consumer app is, I don't know, decentralized power or harnessing the power of the sun. And so we're building power grids and we're using blockchains to enable the exchange of energy credits across the world in order for me to tap into my local power grid. That's the application. And so I think in the future, it's not going to be a crypto native first trying to build this out. It's going to be a company that specializes in the application, in power first. And then they'll have a crypto arm or they'll use a third party.
Yeah, I was going to say, and use crypto as a tool or to
Right.
empower it.
Exactly. Yeah. The same way as how application companies use software service like SaaS, right? So so the crypto natives now are innovating on the infrastructure, and they're the right people to do the research and development on the infrastructure because no one else is familiar with this. But after we've figured out and standardized the infrastructure, the crypto natives are not going to be the ones capable of figuring out power, figuring out the healthcare system, of figuring out like how titles for houses are going to be transferred on the blockchain. These are all themes that I think that as crypto natives we are right on the ball on the thesis, but on the execution it's not going to be us who does the job. It's going to be the people in those industries that are the experts of those applications leveraging the crypto native technologies and using maybe help from the crypto native companies to do that. So it'll be some kind of like partnership in that regard. And eventually, I think commercializing the crypto native knowledge of and usage of the blockchain is going to be what helps us scale to the next consumer app that hits millions, hundreds of millions of new users. So I think that's coming in the next 10 years.
Got it. I want to tie back into a little bit of what you shared earlier and what you've shared now around standardization of the infrastructure. because in that standardization, you start to narrow out like a lot of players, right? And that standardization in some ways might incentivize centralization because then you just have a few winners who kind of meet this benchmark that we've set or the industry set. Is that in any way sort of, again, trying to strike that balance between decentralization and making sure that things are being done right? How does that, like, what does that interplay look like when you talk about folks bringing what they think or see as standardization versus being a gatekeeper?
Yeah, yeah. So important to disambiguate. So when we talk about decentralization, like first principles, what are we talking about? We're talking about if we take the Bitcoin example, like where is it important for Bitcoin to be decentralized? Well, it's in the control of the printing of the Bitcoin, right? It's in the like who gets right access to the Bitcoin blockchain. And and when you talk about centralization of Bitcoin from the money aspect via BlackRock and whatever, BlackRock still doesn't get to have right access to the Bitcoin blockchain unless it buys up a bunch of ASICs and starts mining it, right? But that's not what BlackRock is doing. BlackRock is just buying a whole bunch of Bitcoin, the currency. And so that therein lies the difference of like, okay, if we're talking about the US dollar, who gets right access to the US dollar's ledger? Well, it's the Federal Reserve and only the Federal Reserve. But BlackRock and you and I could buy up a whole bunch of dollars and have no say in the right access of the blockchain of the US dollar. So that's where decentralization matters. So in terms of like other crypto applications where it matters is in the right access of the blockchains. So like in the Cosmos Hub, it's like who's a validator. In terms of interoperability solutions, when we converge on a single standard protocol, like the thesis of IBC is such that it should be credibly neutral and anyone would be able to use it. And there's no gatekeeping in IBC, there's not even a token. And so anyone is able to use it as a neutral cross-chain communication protocol, right? Like compare that to Layer Zero has a token and there's a company behind it that operates a relayer that makes money off of it. I'm not saying that in and of itself is conducive to centralization of control, but there's that additional aspect. So when we talk about standardizing and converging on a single neutral protocol, it's like it's the equivalent of people figuring out like what's the best design for a fiber optic cable, if you know what I mean. Whereas when we talk about decentralization, if ISPs were to converge on the best design for its phone lines, that's the equivalent of the crypto space converging on a standardized interoperability protocol. And that has nothing to say about the decentralization of the applications themselves, if you know what I mean. Does that make sense?
No, 100%. You did that brilliantly. I wanted you to be able to delineate between the two, just so we understand what you're driving at here, the difference in when we say decentralization and standardization and how the two are not mutually exclusive. Right. So, but yeah, I think you did a brilliant job, like explaining away the points you're driving at there. So I would just want to switch it up a little bit because you are by far one of the most prominent women in crypto, builder, investor, however you cut it, and wanted to just get your thoughts on advice that you would give women who are considering blockchain or crypto as a career. You're very early in this space. It's a very different world today. How can they break in this space, and where do you see the opportunities?
Yeah, I think that if this is something that you can be passionate about, absolutely pursue it with all that you've got. Whether if you're coming in the space as an artist and you see NFT or working at OpenSea or hosting NFT ticketing based gallery events, as your thing, go for it. If you're coming at it from it as HR or a marketer or something else that interests or you specialize in, you should be able to bring that to the space and contribute your knowledge, right? The one thing that I would say is the only way that anyone, male or female, can have lasting power in this space is if you are fundamentally passionate about some aspect of crypto, whether it's technology or whether it's because of the origins of the ideology behind one ecosystem over another. That's all I'll say about that, because you come in it with the mindset of I'm just going to extract as much value as I can in a short amount of time as I can. Just trade meme coins. So that's right. That's what retail has figured out. So, but if you actually want to work in this space, I think you should really look deep within yourself and ask if there's something about it that I'm passionate about, and finding out what that is and where you can position yourself within that passion is going to pay off.
Now that's very powerful. I love it. I'm going to close out here with just getting your thoughts to our listeners on what else in crypto excites you. I, of course, saw your recent tweet on agentic AIs going on chain. So clearly you're bullish on the crypto AI intersection. Would love to hear your thoughts more on the tweet, and of course, what else in crypto you think is going to be interesting in the long term.
Yeah, so excited is a maybe not how I would describe it. So here's and as you know, I'm a contrarian, right?
Maybe cautiously optimistic then?
I mean, yeah, we don't need to focus on the exact semantics, but rather like the way that I'm approaching this is like, and this is a similar way as how Peter Thiel was thinking about it. I watched the Joe Rogan podcast recently and was thinking like, wow, actually, we came to the same conclusion, because if you look at the world of bits versus the world of atoms, right, like the meat space stuff, there really hasn't been any innovation in the world of atoms like that. Innovation has stopped at the height of the Industrial Revolution, right, with like Ford vehicles and whatnot. But the world of bits has just been innovated on to death, and we wonder why. There's been only a few, like if you think about our generation, like people who are basically alive now and in the past 30 years, there's only been like three paradigm shifting technologies that have taken us through quantum leaps of changes in our lifestyles, right? And that being one, the internet, two, the smartphone, three, blockchains as enabled by Bitcoin, and now the fourth one, right? We very recently it's AI, and so in the world of bits, we're going to reach this sort of exponential rise in technologies that we've never seen before and we can never imagine. In the 1970s, people like when you watch the movies Back to the Future or whatever, they were predicting that by 2020 we were going to have hovercrafts, anti-gravity machines, and all of these amazing technology that resides in the world of atoms, and that's just not the case. And I think that I attribute this to the notion of scalability, right? Like there's this notion during what Mark Andreessen was talking about, the software is eating the world. It's that the world of bits is infinitely replicable and cheaply scalable. To you be able to, if I build a piece of software a la Facebook in North America, someone in Indonesia a split second later could use that same software. It's infinitely scalable and cheap to use. And so as a startup founder of software, your technology is going to be able to scale to significantly more people, and you're as a founder going to be able to get infinitely more upside by selling the software than you would be in building something in the world of atoms, right? Like if like Elon is the only entrepreneur in recent memory who really innovated in the world of atoms, where you have to front load so much of the cost to building a physical factory to then copy physical cars. And that is just so expensive. And I think that's why we've seen very few people innovating in the meat space world compared to the software world. So that being said, when I was thinking about like, okay, when I finally understood Bitcoin, I immediately jumped in because it was just the like one of the most exciting opportunities you could jump into at that time and have just asymmetric outcomes at the end of it, right? By making a contrarian bet. Like if you think about what other industries sort of replicate all those same properties and have the same favorable conditions as crypto had or Bitcoin had pre 2017, there's very few. I can only think of AI as right. I mean, like if you look at the industries that are interesting and are conducive to some kind of paradigm shifting breakthrough in the future, it's crypto or like rather crypto's in the past. AI is in the past because AI has already passed the Turing test. What else is there where there's alpha in joining early, investing early today? Space exploration, not really, right? You
Yeah.
just in right. Quantum research, maybe, but there's like still, right? It's like still a research thing. It's not commercialized. You can't really break into it. Robotics, the only place that's being innovated on is sex robots. VR, but VR is still right. Like it's still very niche and it's not necessary. Like you'd still have to join a company to contribute to it. Longevity, biohacking, that's really it. And so when I was looking at this, like, okay, well, AI is really the only credible place where you could invest in right now and still possibly do something interesting in it. And so it was more of like kind of like an ambivalent relationship that I had with crypto and AI and starting to be open to investing in that area. That's the flow of logic that I had when starting to open up to AI. So that's why I say I wasn't necessarily excited, but rather it's just out of necessity, I would say, or like scarcity of innovative things to be able to invest in.
Got it. No. Walking us through your thought process there is actually really helpful in also helping break down how you understand and how the framework in which you look at opportunities and innovation. And yeah, I think AI right now probably is the strongest of all those themes. And even on the innovation curve, probably the furthest along. But this has all been very deeply insightful, Chjango, and I can't thank you enough for giving me the opportunity to put you in the guest seat, being a podcast host yourself, and just hearing your thoughts, especially coming from a long and storied journey in crypto. This has been very exciting. So thank you for being on the show. Would love to perhaps have you back one day and kind of follow on and as you like evolve in your thinking on how this all unfolds. But yeah, thank you again, and let's definitely stay close.
Yeah, thank you, Benga. I enjoyed it thoroughly. So thanks for inviting me.
Awesome. Absolutely. Take care.
Take care.
Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations from the most interesting founders, builders, and investors from across the world. Thanks so much and have a good one.